Right, hello everybody. Welcome to today's podcast. It's the 7th of September 2020. My name's Adrian Boothie. I'm the head of trading here at Trend Signal, and joined with me today, as ever, is our chief analyst, Jerry Miller. Hi, Jerry.
Hello all. Hi, morning.
Plenty to talk about today. Some massive movement on the stock market. We're going to be talking about Softbank, which seems to be the stimulus for the big fall last week, and a few other bits to go through as well. Jerry, why don't you kick us off as ever? What do we know? What's been going on?
Wow. Well, what about a volatility? It sort of was expected, but we just don't know when it's expected. We saw some extraordinary moves in August, Adrian, which now sort of makes sense. They do and they don't, but I can explain. So last week, certainly on Thursday and Friday, the markets got unnerved by quite a bout of profit taking in big tech. The fangs without the N, it's now Microsoft, not Netflix, but these stocks have just been going ballistic, absolutely ballistic, and just good old-fashioned profit taking, Adrian, I'd say, is the headline, really. Is it worrying? Not really, not when they've gone up, and the Nasdaq's up 33% on the year, bearing in mind how far it had fallen during the start of the pandemic. It's been an extraordinary performance, absolutely extraordinary.
I think one thing statistic that I heard that kind of puts it in perspective is that I think on Thursday Apple fell by about 8%, and it fell by the same market cap as McDonald's. And that's only 8% of Apple. And you'd think of everyone knows McDonald's is a ridiculously big company. But not compared to Apple. Obscene. Really.
Apple sort of eclipses so many things now, being the largest company by market cap globally, and even when you take into account Aramco, the Saudi oil company, it's just extraordinary. Last week, the value of Apple, temporarily mind you, surpassed the total market capitalization of the FTSE 100 constituents. So that's all 100 stocks in the FTSE are worth less, or were worth less, than Apple was on Tuesday, I think it was.
Extraordinary, staggering. It really is.
Then I also read over the weekend, Adrian, that there's this small cap index called the Russell 200 or Russell 2000. I apologize, Russell 2000 index, and that basically is a list of the top 2,000 small cap stocks in America. Well, guess what? Apple surpassed the gross capitalization of all 2,000-ish stocks. I say 2,000. It's not always exactly 2,000, but it's roughly 2,000. Apple is worth more than all of those companies put together. It is just extraordinary. And it dominates everyone's portfolio. And everyone talks about, well, I'm making this money, that money, and everything else. But would you buy it now? Would you get on that conveyor belt? Not in a month of Sundays, surely.
Some people will be, and we'll find out in a month or so whether it's a good trade or not. But this news about Softbank kind of put some of it in perspective. Do you want to just tell us a little bit about that, Jerry?
Yeah, as the precursor on Wednesday last week, we had a report about this spike in volatility on the Nasdaq, and what these market watchers have are ways of monitoring the volatility, and on the Nasdaq it hit 38%, whereas the broad market, that's the S&P 500, which has got the VIX, that was 10% lower, i.e. the Nasdaq was 10% higher, and they couldn't understand it. No one could explain it. Why was the volatility going up? Well, as it turns out, there's been a massive play by a company called Softbank, which is a Japanese-based sort of conglomerate come asset manager that's been hoovering up vast quantities of call options in big tech and other tech, to the extent that it's pushed volumes in some of these options up by 300%. And I think, this company or this asset manager is run by this chap Mayoshi Son, and he's referred to as the Nasdaq whale now for these massive bets on these tech giants using the options. But they are a significant risk, Adrian. But they are, for now, they're accounting for a big portion of the daily volume. But when the news came out, it's now like, right, so that's what's happening. So when he stops buying, what's going to happen? Let me think.
Yeah, you're at real risk of just one buyer, aren't you? Or if indeed he starts to close his positions out. It's you're at risk of just one guy's mood, and that's not really the best place to be, is it? That's for sure.
No, that's right. I mean,
So
all these prices have got massive. They've gone through the roof, and everyone knows that they've got a long way to. They could fall quite a long way and still look pretty good.
yeah, but it definitely puts it in perspective what's been going on with some of these tech stocks, and over the last couple of days, I think a lot of people have just thought, God, that's a bit of a risk, and just started to just close their positions down. It sort of makes some sense, particularly when you consider what was it that Tesla rallied 74% in August alone?
Yeah, it's nuts. I mean, we had a chat before coming on air now, and Tesla announced a stock split in early August, and in August it's rallied 74%. It's the sixth biggest company in America. It's just off the Richter scale.
I mean, just from the multiples on that, I mean, the company's only ever had 4 quarters in profit, and a lot of that's to do with sort of carbon credits rather than natural sort of trading.
Yeah,
and it's the 6th biggest company in the States. It's just unreal.
Actually, on the subject of Tesla, it's curious. On Friday, the S&P Dow Jones indices, which is the company that basically decides on the components of the indices, made their sort of quarterly announcement about the shake-up of the constituents in the S&P 500. Rather bizarrely, Tesla was left out of the index, and I think everyone expected it to go in because it satisfied those criteria. And I know you've mentioned about carbon credits and stuff like that, but profits are profits, and it's had 4 consecutive quarterly profits, which is the criteria for entering the S&P 500, as long as you've got a valuation that makes it. But Tesla didn't make it. And I think after hours on Friday evening, it fell by 7% in reaction to the news. Yeah. But what's interesting is, having been rejected from the S&P 500, Tesla, being the 6th largest stock in the US, is 100 times bigger than the smallest stock in the S&P 500. So it's sort of nonsensical, but maybe they just think it's too volatile and could easily come off 90%. I don't know.
Maybe. I mean, certainly, it is going to come off because there'll be a lot of fund managers, pension funds who would have been building positions in Tesla from a tracker perspective, looking to track, what the S&P 500 will be on the basis that it was a shoe-in to get in.
That's a good
point. Now that it's not, they have to then unwind those positions because it's not part of the track. If you're buying portfolios for an S&P tracker, you have to have all 500 constituents, surely. But it ain't.
Yeah. No, you're right. I mean, but hey, listen, it's up 74% in August. I mean, if it comes up 20%, does it look much? I mean, if you look at a chart for the year on Tesla, it's up 500%, something like that. And if you look at it from its low in March, when at the depths of the pandemic sell-off, it's actually rallied 700%. I mean, these are nutty prices. But you know what? I think with the news out the bag, I think investors are going to they'll probably use this announcement to take some more money off the table. So I would expect to see more selling in the days to come, possibly. And if Softbank have got their wits about them, they might want to do a bit of that themselves.
Yeah, I should say so. Of course, if they do, that's going to move the market somewhat, isn't it? That's for sure.
Well, there you go.
So what did we do on the week then last week with these equities? Obviously big corrections, but they had a pretty decent start to the week though, didn't they? So it wasn't a massive gloomy week for stocks, was it?
They did. The S&P basically had its worst day, I think, on Thursday since early June. Nasdaq had its worst day since March. So that really puts it in perspective. And that really was not even that half decent non-farm payroll. The employment data, Adrian, on Friday could really deflect the moves. And I think the only one that did manage to keep its head above water was the Nikkei. And I think that's probably more likely something to do with the resignation of Shinzo Abe. Although I always thought he was quite popular, so I'm not sure what the market would go up on it. I think also the dollar strengthened quite a bit against the yen, so that also supported the Nikkei, but it was not affected. Whereas the FTSE, gosh, we gave up 2.75%, and the DAX here in Europe also gave up 190 points. That's about 1.5%. So, but in the context of where they've come from, it ain't much, Adrian, though. And anyone who thinks that, oh, now I'm buying dips, it's fine. And that's worked, but one day,
until
as people found out, until it doesn't. Yeah, that's the phrase I was looking for.
Yeah, absolutely. Okay, and what about the currencies? Because the dollar's certainly been on quite some retreat over the last little while, isn't it?
Do you know, Adrian, I was expecting the dollar to rally a bit more. You know, we've come up from 112, 113 against the dollar on the euro from early July. And what did we hit at the beginning of last week or end of the previous week? I think it was 120 against the euro, against the dollar. And I would expect to see the dollar rally a little bit more on the back of this as the markets, and it was quite a significant sell-off Thursday and Friday at one stage, although the markets did bounce a little bit to the close. But I'd have expected the dollar to have sort of snapped back a little bit more, really. Maybe it will do.
Just for clarity, and that will be basically a risk off play. So people will be switching out of riskier stocks and then putting into safer havens, perhaps like the dollar.
Yeah, that's right. And I think, and it was pretty good on employment data, which didn't seem to have a lot of impact, really. And actually, the dollar was moderately strong after that employment data release on Friday afternoon. But by the close, the dollar gave back a lot of its gains on the day, which is just weird. And then you've got sterling, of course, which continues to defy all the doomsayers and skeptics, but I think it's having a slightly trickier time at the moment as these sort of final negotiations in the Brexit, the trade deal, and I think what's his name, Barnier, said he's worried and disappointed by a lack of concessions from the UK. I think that's probably what we would say about the EU, I suspect. But maybe is that factored in, no deal? I would suggest not. My suspicions are that this is all game playing, Adrian, and the way the EU work, it'll be a last minute deal, if I could suggest that. But
game playing in the media followed by a last minute deal.
Hasn't happened before, has it? Well, happens every time, doesn't it? Yeah. But that's it, really. Apart from precious metals and gold. Well, gold just reacts to the dollar, really, and it's sort of having made that $2,000 level. It's really struggled, but it seems to have sort of found a bit of a support where we are now, really, sort of between that 1920. It seems well supported there and constrained sort of at 2,000, really. So we're stuck in a sort of a $70-80 range at the moment. Whereas oil,
we had these conversations a while back, wasn't it, where we were stuck back here. You can see my screen in sort of mid-July, and we had to pop above this sort of 1810 level. And then when it did that, it sort of went for it. And I think if we can get back above 2000, we have a nice convincing close above this sort of 18th of August level. I see another big wave higher, but I think we've got to get up there first, haven't we?
It sort of depends on the outlook of the dollar as well, and I think this has all coincided with a significant weakening in the dollar, and that really has definitely ground to a bit of a halt. Maybe it's just a bit of digestion, or indigestion, I should say, but there is sort of question marks over the ECB's willingness to accept this a lot stronger euro, which, let's face it, is a big drag on the economy. So it offsets quite a lot of the QE and the other monetary stimulus. So, whereas the US is benefiting from a weaker dollar. So, but the ECB we're meeting this Thursday, so we'll find out what they think about the whole deal.
And of course, we'll go through the calendar and events in the podcast in just a few moments, because we split it up now, don't we, into two separate podcasts. But just finally, possibly finally, oil. Bit of a pullback on oil last week, but again, largely moving in line with equities, isn't it?
Yeah, I mean, we've been making that point over the last sort of 3 or 4 weeks, and also the point that it looks vulnerable to a sell-off in equities, i.e., it's just making gradual gains, higher highs, higher lows. But then as soon as there's a chance to come off, wow, in 3 days, 4 days, we're back to early July levels. So in 4 days, we've gone from sort of multi-month high since the depths of negative prices almost, and then we wipe out a couple of months worth of gains in 3 days. But that's oil.
Yeah, up by the stairs, down by the escalator. But it's always the same way, isn't it?
Very much. I mean, it was a big move. I mean, WTI fell 8% last week.
Yeah. And these moves have been nothing like, okay, we had a big move here, sort of right at the end of July, but otherwise it's been sort of slowly ratcheting its way up, hasn't it? And quite small candles. The ATR's really been quite light, and
not now. We'll see. But of course, being a holiday in the US today, we're not going to get much of an inkling, because we need to see what the stocks are going to do with the likes of Tesla and Apple. But we've got that delight to happen tomorrow afternoon.
Yeah, exactly.
Tuesday afternoon, I should say.
Anything else to run through?
No, that's really it, Adrian.
Pretty much it.
Sort of summary of what happened last week. Yeah.
Good. Okay. Well, look, stay tuned. We'll be pushing on with the week ahead a little bit later on, so you can check that out on your favorite podcast place. So we'll be talking about the main events that are coming up for this week. There are other events outside of the economic calendar, however, that you'd be welcome to come along to. So, for example, at Trend Signal, we've got 3 live trading events going on this week, where we invite home traders from around the world to come along and see what we do, how we do it, have a look at the strategies, learn one of our favorite trading strategies as well. And it's all about simple concepts to identify turning points, trends, and momentum. And if you'd like to learn a very simple to use and yet very powerful trading strategy, then get yourself booked in for one of our live trading events. We've got one today, Monday, Wednesday, and Friday this week, and you'd be absolutely welcome to come along. They're free. All you got to do is go to the webpage, bit.ly, so bit.ly/learnts, so bit.ly/learnts, and you should see it on screen as well if you're watching this on our website or on YouTube. Get yourself booked in, and we'll teach you what you need to know. Otherwise, everybody, have a great week's trading, and we'll see you online again next time. Bye-bye for now.